Okay, test. All right, today is February 3rd, 2026, and we have gonna do a little market review. Today was a pretty influential day, I'd call it, just because of the ground that we covered. So we got the mini S&P March 2026 contract pulled up here. So on a daily, let's go electronic. So we had our previous 3-day look back here. We saw the high of yesterday was taken out at 717.25, and we had a break lower. So at first glance, you might not see much going on here, but one thing to note is definitely this small little imbalance here. Let's see if we can get it pulled up. That was hit today. And as we can see, the high of the day was there. Additionally, so I know this was marked out in the NQ, but another piece would be this imbalance here as well. But before we mark that out, so we had made this annotation yesterday, and what we can relate it to is what I aligned yesterday. This candle high, or candle open, was a target, and that was hit last night. And you can see from these regular trading hour lows, that was the draw. It's not as apparent on our electronic trading, because we had yesterday's trading was down here as well. But these levels were the draw on liquidity. So it's always important to have, that regular trading hour sessions, kind of shed light on those when doing analysis. But if we break it down even further, looking at, so we had these areas were used today, or last night rather. So if we break down further, you can see how, even after this big drop down at 9:30, off of our open, we did our initial, pre-market trading up into that imbalance, took out or tapped into this high. The high of the day was made during the London session primary hour, 3 to 4. So that's significant. See a tap in to that regular trading hours liquidity zone at 8:30, and then coming to the open, see the initial Judas swing to take out this little consolidation area, and just barely missed. That area, but if we refine it down further, so we have this inversion, which, look at that volume balance, that's where the high was. Almost to precision. Pre-market, you want to see PD arrays overlapping. So this imbalance was there. Midpoint was respected on a 15-minute high back into that consequent encroachment and a break lower. Refining it down further, here's that tap back into, what was that, a 1 hour inversion level, but we also want to include this volume imbalance, and that could give us more information. So pre-market got our run up and the slow grind leading up to 9:30 before this Judas swing. We break below that 1 hour inversion level. Retreat back, take out the candle body highs. I make reference to the bodies because if you look at something like this, using different pieces of that line chart, you get a gist of where people might get scared. So we would generally use closing bars. But back to the bigger picture here. This is the area of liquidity that is most influential, because you see that initial sell model being created just off of this candle at 9:43. Imbalance created, travels back up, has to take that out. And then during our macro, there's a low risk entry following the sweep. down, no reason to hang around in that hourly. Break straight through visits that regular trading hours gap, or rather this new week opening gap. Jumps around, does some damage. See how it stays in the upper half. Comes up, takes out liquidity at the high. And then continues lower. This is that 11 a.m. macro. Where we would be looking at, both this inversion area as well as this internal bearish imbalance, which is tapped into before the move lower. We break through that midpoint, comes down, hangs around in that lower quartile before it snaps through the low, offers a premium of that range, and continues lower. Makes the regular trading hours, comes back, uses that as a very minuscule premium array, and then goes for the next. And then 2 o'clock, we get the reversal, comes back, uses that regular trading hours liquidity as a discount array, and continues higher back into that weekly opening gap. My target was just this, because these bodies, if we pull out the line chart, relative equal highs. So now that we've done that business, let's go into our deep look back and the low time frames. So there's that 8:30 first presentation, which we tap directly into at the 9:30 open. Continue lower. First presentation overlaps with the 7 a.m. first presentation. Keeps showing, respect to that level. Bodies don't even come close by the time we're at 9:40. So we have this imbalance here. First presentation overlapping with a new day opening gap. That's strong bearish tendencies. So even a move from here down to the midpoint of the new week opening gap, it's 5 handles. This is an A+ entry right here, entering right off of that midpoint of the new week opening gap. And that is from, is that this week? January 11th, yeah. So quite a look back there. As you can see, big dive on that 950 macro. We use, again, another new week opening gap for that continuation lower. And into the 11 a.m., again, refer back to gap to gap. Immediate rebalance, shoot lower. These things are there every single day. This right here, 2, 3, 4, 5, yeah. Almost the midpoint of that wick. But it becomes like right here. That is so strong. So at 11:12, this is the entry. Okay, these overlapping gaps. That's strong. There's so many different opportunities in here to get 5 handles or more. Comes down, gets into these overlapping new week opening gaps. Chops around on the new day in the upper half. Breaks lower within the macro. These are the reasons that we are driving lower. The last gap in sight. Within almost 50 points. That's our low of the day. Isn't that surprising? It is amazing how every single one of these levels was referred in some capacity. It's always every peak and valley is referenced in these inefficiencies. Midpoint entries, low gaps, wick jumps up, takes out these few highs right here and breaks lower. Revisit it again to get this initial push lower, all the stops. This will just scare him before returning back to the new week opening gap down here. It's a grind, lower and lower, and you can use these levels as a reason to enter a trade, and it should be you should have the confluence both in the price action and the gaps. Same general principles in NQ. I don't have all the gaps drawn out on here, but just the most recent are still referred to. So depending on your look back period, is referred to continuously, and there's always a PD array that's being used for every high and low. You just don't see it at first glance or without the right tools, but it becomes important to note. Not as much on the open for the NASDAQ, but we saw the dip down, came back, and we opened within the gap. Lower and lower, but this will be referred again. So everything is really drawn out and precise. But another piece I wanted to note in the NASDAQ was look at this draw on liquidity. Let's get rid of all the drawings. Look at the relative equal lows that formed. Regular trading hours. Target that off the Judas swing. So you don't even get the high, just close enough. Could have got over 1,500 ticks. Beautiful. Still in regular trading hours. What was used? Let's see what that looks like on our electronic. Same thing. 4 hour. Body's respecting. It all becomes clear when you know what to look for. Okay, that's all for today. Be safe. God bless.